We're at the halfway point in 2014, and the numbers are in for the Tampa Bay industrial market. We're showing room for optimism, if not outright celebration. Hi, my name is Ed Miller from Colliers International. It's time for the Tampa Bay Industrial Report. We're closing out the first 2 quarters of 2014, which shows an improving market, overall vacancy falling to 9.5% from 10% overall, for the first time in years on quarterly absorption of almost 800,000 square feet, and total annual absorption until now of about 1.5 million feet. Rents are up as well, averaging $4.73 triple net, an improvement over the $4.67 from last year, and we see ourselves on a solid glide path for the nearly 197 million feet of space that we cover across 6 submarkets in a 3-county area: Pinellas, Hillsborough, and Polk counties. Let's take a closer look at the submarket breakdown. First, Pinellas County. We divide this county into 3: North Pinellas, Gateway in the middle, and South Pinellas, and all are showing positive absorption with about 51,000, 60,000, and 27,000 feet of absorption respectively. These are smaller markets made up of technology, pharmaceutical, and manufacturing companies. So it's also a fairly densely developed submarket with limited land for new development, and these markets consequently average higher sale rates and higher lease values. This quarter is no exception. We show averages ranging from $4.30 triple net to over $6.50 triple net across all product types. In Hillsborough County, we cover 2 primary industrial submarkets. The smaller airport industrial market in the northeast is about 16 million feet, and it showed a negative 36,000 feet of absorption, with average rents of $4.50 to $7 net for service space. We view this slightly negative quarter as something of an anomaly in an otherwise recovering market. The airport submarket was hit hard in the downturn, with values and rents falling significantly. This is also one of the better performing submarkets in an uptick due to its proximity to Tampa International Airport, relative scarcity of available land for expansion, and collection of companies in the construction, shipping, and manufacturing trade that have good reason to be in this location. The larger Hillsborough market is the east side, or I-75 corridor, at 48 million feet. Here we saw a net gain of over 335,000 feet after a slightly negative first quarter. Average rents in this market range from $3.75 triple net to $5 triple net for distribution space, and upwards of $9 triple net for service center and office. This market, too, is in recovery phase. It's been a big performer in absorption in previous market cycles, and we think tenant interest from both new and expanding tenants already in the market will make for steady improvement over the subsequent 2 quarters. The 6th submarket is Polk County, the smallest of the 3 counties in population, but whose convenient geographic location and strong transport infrastructure along the I-4 corridor encompassing the city of Lakeland give it the largest concentration of distribution and manufacturing space in the region. Polk County and Lakeland are shaping up to have impressive growth this year, adding over 460,000 square feet of space this quarter, nearly 900,000 square feet for the year, well over 1 million for 2014 if things continue. 2 big endorsements for the market are the 1 million square foot Amazon distribution center just completing construction, and the O'Reilly Automotive Distribution Center, which opened last year. While both of these deals were counted in absorption figures for the past quarters, both projects are also clear corporate endorsements of the I-4 corridor as the key growth market for delivery and consumer goods for the state. We think 2014 is the inflection year for our market, where Central Florida pulls out of the significant hole we fell into in 2008. So what's next? In past recoveries, right about now, we usually saw rising rents and falling vacancies lead to a speculative development market. Back to that inflection point we mentioned earlier. And we have seen 1 new project break ground along the I-75 corridor, but we need a lot more new development to call this a full-blown recovery, and we may be there. So stay tuned, and we'll find out together how this all turns out, because to quote my favorite yogi, it's hard to make predictions, especially about the future. I'm Ed Miller with Colliers International. If you have any questions or comments about this report, please feel free to email me at ed.miller@colliers.com. Until next time, thank you.